bouncing back from a number of metrics. Over the last several years, we've seen inflation, which is then being reined in, inflation is now between the band or the set target by the government and the central bank, which is 6 to 8%. Currently, we are at 6.8%, last reported inflation number. We are also seeing a stabilized exchange rate, which is hovering around 19.8%. Kwacha, sorry, 19 kwacha actually today. If you look at the exchange rate that was published this morning, and this is as a result of obviously policy consistency reforms that have come through from the central bank introduction of the currency regulation directives, and over the years we've seen new laws that have been introduced and enacted, and just in April of this year we saw the National Payment Systems Act come through, and touching on today's topic, we've also seen the Banking and Financial Services Act that was basically relooked at and enacted in April this year. So there's a lot that is actually being looked at this year's symposium. And to summarize it, the involvement of other central banks in this year's symposium is key, in that we are learning off each other. Countries like Botswana are going through the sort of navigating what's happening in their own fiscus. We learn from what is happening from the central bank governor's representative there. We are learning from Lesotho in terms of what they are making, the steps they are making in terms of how they are also navigating their own good sides to what's happening in the economy, and also challenges in what's happening in that economy, because every economy is exposed to different cycles. So the Zambian cycle is such that we basically are looking at an improved economic environment, like I mentioned, from an inflation perspective, exchange rate perspective, but the discussion that we are actually having now is in times when there's sunshine, which is basically times when, as banks, there's strides being made, and banks are basically in a situation where there's improvements in the operating environment. It is the time to increase your capital buffers and make sure that you are able to absorb shocks when shocks come through. The shocks that we talk about and possible areas where risks do arise are things like that impact the financial system, that comes through from an external perspective, more or less, I think, linked. Recent ones I can mention, basically, I think, which impacts the entire economy, are things like your geopolitical matters that then impact the entire country, like the geopolitical matter that has arisen in the Middle East. So that has got impact. How do we as a financial services sector deal with potential impact of that? So things like stress testing are carried out by the banking sector to make sure that we can weather the storm. So in times when you are forecasting and you are seeing that there are possible matters that may impact you as a country or as a sector, how can you navigate some of these things? And we're happy to work with the central bank as well as the government. And I think we also actually heard earlier today from the Bank of Zambia governor. We heard from the Ministry of Finance and National Planning Permanent Secretary, Mr. Mulele, in terms of how we as financial institutions need to partner with government in ensuring that we plan adequately, in times when we are seeing business as usual, times come through, make sure that we plan for any challenges that may arise as a result of things like geopolitical matters and climatic challenges that have impacted us in the past, like the drought. So working together to make sure that we build capital buffers that weather the storm. And essentially, we have had a very good collaborative period with the government through the Bank of Zambia engagement that comes through when there are reforms that are coming. I'll give you an example of the currency directives. We essentially had engagements with the government through the central bank in terms of how does this impact your clients.